Hey Ed.
Hey Ed, how you doing? Hey everybody.
Okay, so can we talk? There is something going on right now in the banking industry and the real estate market that you are not hearing about in the mainstream media. They will not tell you what I'm about to talk to you about. All right, so let's get right to it.
Because you asked for it.
Okay, so my name's Ed Anderson, and I'm a roving reporter for The Unspoken Truth. And today I want to talk to you about a very serious topic. There are issues going on at the banks and in the real estate industry that you are not being told about. And today, I'm going to show you even more evidence of the fragility of the financial system. Now, I've been doing my best to sound the alarm bells about what's going on in the financial industry. And some of you have taken heed of my message, but I still think there's an awful lot of you out there who are whistling past the graveyards. Okay, so banks right now are in dire situations. I don't know whether you've noticed, but banks have been closing all over the country. I'm talking about branches, dozens at a time. Right down the road here, not only did they close the Wells Fargo branch, they're knocking it down. They brought in the bulldozers, literally. They're knocking the guy down. And at my U.S. Bank, which is a couple blocks away, you walk in and that place is a ghost town. You can not only swing a cat, you can swing a golden retriever in the lobby and not hit any employees. I mean, there's one teller where there used to be four. The guys who sat at the desks to help people, fill out loan applications, they're all empty. Banks have stopped lending money. At least they've reduced the amount of lending that they do dramatically. Banks have been cutting credit limits enormously, and I told you they were going to. They're offering far fewer mortgages. They're cutting back credit card limits. They're reducing or eliminating personal lines of credit. And when banks are not lending, they are not making money. That is how banks make money. Now, when you add to that problem, they're sitting on a lot of bad debt. And by bad debt, I'm talking largely U.S. Treasuries. Yes, remember, interest rates have been going up sharply over the past year and a half. And as interest rates go up, the value of bonds go down, even U.S. Treasuries. So the balance sheets of these banks are getting worse and worse every week. So let's get into that new evidence that I have for you about the fragility of the real estate market. For that, let's take a look at an article from our good friends at Zero Hedge. Zillow extends a lifeline. New down payment aid targets struggling home buyers. On Thursday, so just yesterday, right? On Thursday, Freddie Mac's average rate on a 30-year fixed mortgage topped 7.09%, the highest since 2002. In yet another blow to homeowners and a sign the housing affordability crisis worsens. On the same day, Zillow Home Loans published a press release about its new 1% payment program to allow eligible home buyers to pay as little as 1% down on their next home purchase. Wow, here we go. There is nothing new under the sun. We have all seen this movie before. For those of you who are either old enough to remember the 2008 to 2010 financial crisis, or you saw the movie The Big Short, this should sound really familiar to you. Again, Zillow Home Loans published a press release about their new 1% down payment program. This program can reduce the time needed to save for a down payment and provide another option for those who are otherwise ready to take on mortgage payment. Zillow said, adding the new program will first be available to Arizona properties with nationwide expansions soon after. Zillow aims to lower the down payment barrier and increase activity in the frozen housing market. The highest 30-year fixed mortgage rate since 2002 has sent mortgage applications to the lowest level since 1995. Okay, and this is the graph of the Home Purchase Mortgage Application Index. Look at this. People are not putting in applications anymore for mortgages. Okay, listen. Is anybody in my audience surprised at this? Let's review some of the things that I've been telling you about. The American consumer is tapped. And I think we can extrapolate that to the whole world, right? People are strapped. That's one of the reasons why this song has become so popular.
I've been selling my soul, working all day, overtime hours for bullshit pay, so I can sit out here and waste my life away, drag back home and drown my troubles away. It's a damn shame.
Yeah, that's our new global anthem, right? But people are living hand to mouth. For those of you out there who were able to buy a house, I promise you that the vast majority of homeowners in this country were able to scrape together the down payment with not a whole lot left over in the bank. I mean, banks usually want you to have at least 3 or 4 months worth of mortgage payments in your bank account. Although we're starting to see those kind of requirements being reduced. Let's say that you just bought a house in 2019, 20, 21, and you got a 2.5% or 3% mortgage. Okay, God bless you, man. But you have kind of a dilemma here, because if you're one of those majority of people who do not have a whole lot of money left over to spare, your cost of living is going up. All of it, even though you might have locked in your 3% mortgage, everything else in your life has been going up with inflation. So it's harder and harder for you to keep up with your mortgage payments because everything else in your life is becoming more expensive. And if you're thinking about upgrading to another house, you're kind of stuck, right? You're kind of in, mortgage jail. Because on the one hand, you have the 3% mortgage. But now, if you go out and buy a nicer house, you're going to be buying that nicer house with a 7% mortgage, soon to be an 8% mortgage. And I think that by New Year's, it could be double digits mortgage. So what do? Well, most people are just going to stay with the house they have. So you're kind of stuck. Besides which, as interest rates go up, the value of properties are going to start going down. So yeah, you got a house, you locked in your 3% mortgage, but I hope you plan on being there for a while because you have a real dilemma there. Now, most people are oblivious to this. Yeah, I know you're busy leading lives. You have to go to work every day. You have a family to raise, whatever. But you have to take a moment to start learning about this. Subscribe to this channel and stay tuned. The people are resorting to tapping their credit cards to make ends meet. Nationwide credit card balances have topped $1 trillion for the first time ever. And that's not because people out there are being frivolous. People are buying their groceries on their credit cards, paying 15 to 20% plus yearly interest rate. People don't tap their credit cards unless they're desperate. Another important clue, by the way, about the health of the banks is they're starting to send out letters that say things like they're going to limit how much money you can pull out of your bank account. And letters saying that they're coming up with new customer agreements, saying that you agree to arbitration rather than suing. In effect, that's what the letters are saying. Now, they package it saying this is more convenient for you and allows us to take care of you better. But what they're doing is they're covering their asses. They're trying to take away your right to sue them. The money you have sitting in the bank is legally not your money. Remember that. Any money you have deposited in your bank account is legally not your money. You are just an unsecured creditor. We are going to see a financial crisis like we've never seen before. It's going to be worse than the GFC of 2008 to 2010. GFC, Great Financial Crisis, right? So I know I might be a broken record on this channel, but there's a reason I'm desperate to get the message across. Please, if you don't mind, in the comment section below, let me know what you think about what I'm saying. Am I being overly dramatic? Is my message making sense to you? And do you agree with the mantra of reduce your exposure to your bank, put as much money as you can into gold and silver, and establish streams of passive recurring income? What do you think about that? Does that sound like a plan that you can get on board with? Now, if you have no clue about how to acquire your gold or how to establish streams of passive recurring income online, reach out to me or Rob, and we will have a nice Zoom call with you, one-on-one, and we'll get you set up. Again, if you haven't subscribed, please subscribe. Please give this video a like and share. Ed Anderson, live from Minnesota, signing out.
Copy that.